Money Show with Bruce Whitfield is proudly brought to you by ABSA Corporate and Investment Banking, unpacking data-driven insights and analysis to turn numbers into tangible business solutions at this year's ABSA Beyond the Budget Dialogue. Now that's Africanacity. ABSA is a registered FSP.
Look at today's levels of the JSE. We're not quite in record territory anymore. We got there. The JSE peaked at about 69,000. We're 2,500 points shy of that at the moment. This has been a bit of a sell-off on the JSE in recent weeks, and not necessarily because of what's been happening in South Africa. It's largely due to what's been happening around the world, and that creates a lot of confusion. It really does. But overnight, last night, the US Fed, the Federal Reserve, met and discussed and decided that they would not be raising interest rates anytime soon in the United States to combat the risk of inflation. Happy to let inflation run its course a little, so that the American economy can recover. And it's a very grown-up perspective by the US Federal Reserve not to get hot and heavy-handed with interest rates. And as a result of that, we've seen a bit of a recovery in the currency, in the rand, 14.77 to the dollar, 20.59 to the pound, 17.62 to the euro, and the JSE not at record levels, but pretty close. Personal Finance brought to you by Discovery Bank, the future of banking now. Why is there this enormous disconnect, Warren Ingram, between the stock market and the economy, the economic performance of South Africa? Before we get to that as the topic, just give me a perspective, please. Because on one hand, we got the economy 7% smaller now than it was a year ago, and the JSE, which is considerably higher than it was 12 months ago. It doesn't make sense. Explain.
I think it's something that bothers a lot of people. You know, they look around and they see all this, really kind of economic devastation of increasing unemployment and people taking pay cuts. And they assume that translates to the stock market. And it's a good assumption. There's nothing wrong with that assumption. That's what happens in most stock markets around the world. They are a function of their economy. So South Africa is slightly different because the top 40 shares in the JSE account for the large majority of the value of our stock market. But what's really interesting is the top 4 shares, so 4 out of the 40, account for 52% of the value of our stock market. So 4 shares make up more than half the value.
Just explain that, please, because that is a mind-blowing statistic. In that, we've got Naspers, and what else?
So the biggest company in the JSE is Naspers, and that accounts for just under 20% of the value of the stock market. The next biggest company is a mining business called BHP Billiton, and that's just over 12.5. And then Richemont, which is listed in Switzerland, and that's really a kind of luxury goods business, and that's just over 10%. And then another mining business called Anglo's, and that's just over 10%. So you add all those together, and you get to 52% of the value of the stock market.
Now, what is interesting about those businesses, Warren, is that one tiny fraction of 1% of what they do in the world happens in South Africa. And I think I don't mean to fast track the conversation, but there's the secret, isn't it?
Exactly. I mean, I think, and you just jump through, to the next biggest companies and just for interest sake, the number 4 is Anglo's at 10%. The next biggest is the first real South African business, and that's First Rand, and that's only 3.5%. And if you go through the top 10, the bulk of these businesses are multinationals earning a huge chunk of their money out of South Africa. And so that's the point. When we look at what's going on the JSE, we get flummoxed because the JSE can go up, 30 or 50% over 12 months. At the same time, when our economy is shrinking by 7%, we need to understand that these companies are being priced right around the world. So I mean, Naspers and Richemont are great examples. They're listed in other countries as well. They're, and a lot of their revenue is earned, from, right through China and basically around the world. And the same with the mining houses. They earn a lot of their money in dollars because they're selling hard commodities which are priced in dollars. So even those mining houses, something like Anglo's, which really was born out of South Africa, it actually has a very small proportion of its its earnings in South Africa nowadays. So that's really the point, is when we get, depressed about the economy and we assume it's going to translate to our shares, that's true for the bottom half of the stock market. So sort of, and when I mean the bottom half, I don't mean in value, but if there are 300 shares, then the bottom 150 are very linked to what goes on the JSE, or in the economy, I should say. But unfortunately, those 150 shares, I haven't done the sums for a while, but I would suggest they probably account for less than 20% of the whole value of the stock market.
And those are the companies which have come to life, a lot of them, over the last 6 months or so, because suddenly the South African economy didn't fall by as much as was expected. The news flow in South Africa was less bad than feared. And we started seeing a really nice, what they call a re-rating, a price increase, some nice growth coming out of some of those smaller companies, particularly when you look at food retailers, particularly when you look at retailers of DIY materials and all of that sort of stuff.
And I think also we're seeing an element of Darwin at work, the survival of the fittest. Because, let's look at something like the construction sector. There were many more construction businesses listed on the stock exchange 5 and 10 years ago. And now I think a handful is probably too many. And what's interesting about the remaining businesses is that they've trimmed all the excess fat. They've got really strong management teams that have been battle tested beyond belief. And so any kind of change in the economy's fortunes would be hugely profitable for them. Having said that, they also have a lot less competition. So you've got the survival of the fittest with very little competition around. And so they're making hay now. And as the bad news ends, as you say correctly, that suddenly life becomes much easier for them. It's a bit like someone who spends their whole life cycling into a headwind, and they do that for 7 years in a row. And then one day the wind turns and suddenly they're cycling with the wind. And that's what we've got now, is these super fit companies that have really only known tough times. And suddenly there's no headwind. And they're actually, they can start to do business in the way they've always done, but no one else is around them. So they're going to win every race for a while.
So if most of the value of the JSE is made up of companies that earn most of their profits outside of South Africa, why is there this obsession with offshore investing? I get that South Africa is less than 1% of the global economy, but many of the companies listed on the JSE are companies that do business in other parts of the world. The obsession and the fixation with global investing is curious in that context.
I think there are probably 2 good reasons and 1 bad reason. So the good reasons are that, for example, if you want to access some of the kind of good technology companies in the world, unfortunately the JSE, it has Naspers, but that's, its biggest holding is Tencent, and that's a very strong business, but it operates really in one country, being China. So to access something like a Microsoft or an Amazon and the like, and the Zooms of the world, I guess, nowadays, one needs to go offshore to find those businesses. The same would apply to pharmaceutical businesses. We've got Aspen in South Africa, but, the companies that are making the new vaccines and the companies that are going to change the face of medicine over the next decade, they unfortunately, we can't buy here. So I think there is a good reason to go overseas to find those companies. And then secondly, if you look at the value of the JSE and those big offshore companies, 2 mining houses making up, 2 out of the 4 biggest companies on the stock market. The thing about mines is, when the going's good, they're wonderful businesses to own because they're hugely cash generative. But when the going's tough, they become really terrible investments. And so, that's called cyclical. And we don't always want to own just cyclical businesses when we're, in the JSE. So I think, to get the diversification effect is good. The bad reason why do people obsess about this is because there are people out there that have got lots of offshore products that are punting, the fear factor around South Africa's political issues, around the tough economic conditions we have had. And they're saying there is no growth, there is no hope, and anything to do with South Africa is tainted, and, sell everything and cash in your retirement funds and send the money out. It's frankly terrible advice, and it's done for self-interest. It's not done for you and me and what we want to do with our investments. It's done for people who want to punt products for their own back pockets.
Yeah, and the trouble of taking advice is that you're always going to be subjected to the biases of the person who is sitting across the table from you, and you've really got to have your wits about you and look at what it's going to cost you and try to figure out what's going to give you the best returns over time.
The Money Show with Bruce Whitfield was brought to you by ABSA Corporate and Investment Banking, providing solutions that can turn numbers into tangible business solutions at this year's ABSA Beyond the Budget Dialogue. Now that's Africanacity. ABSA is a registered FSP.